Hello and welcome everyone to the Gold and Silver Club Commodity Markets Outlook for the 5th of May 2016, presented by myself, Phil Carr, at the Gold and Silver Club. So today we will be analysing the latest developments in the commodity markets. We'll be discussing our outlook for the rest of the week. The live session will be covering an overview of the commodity markets, top trades of the week, live market commentary, trading ideas for the week ahead, and of course we'll be answering any questions you might have during the course of today's session too. So before we get started, let me just introduce you to the Gold and Silver Club. The Gold and Silver Club is the world's #1 commodities trading and investment coaching company. We're regarded as the go-to authority on commodities trading, and as internationally respected experts, our analysis and our opinions on the metals, the energies and the agricultural markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, Global Banking Finance Review, the Wall Street Journal, and of course, it is a pleasure to be here on FX Street today. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth, generate substantial monthly income through commodities using our signature trading strategies. So for more information on the Gold and Silver Club and our expertise, please do visit our website, which is www.thegoldsandsilverclub.com. Okay, fantastic. So I just want to put the commodity markets into a bit of context at the moment. We've now closed out, of course, for the month of April. So we've got quite a lot of data that we can look back on over the first 4 months of the year as we're heading into May at the moment. So really what we've seen over the first quarter of the year is commodity, the bull run is going from strength to strength. April was another strong month for commodities. Hedge funds kept up the strong pace of buying with the total net long positions across 18 major commodities rising by 1/3 to more than 1 million lots. So we've seen a lot of additional inflows. We've also seen commodities overtaking equities, bonds and currencies with the best rally since 2010. So it's outperforming equities, bonds and all major currencies. Oil posted the biggest monthly gain in a year, whilst gold reached the highest in more than 15 months. We saw that breaching $1,300 per ounce for the first time since January 2015. We saw gold surge to the highest levels that it's had in over 15 months, up 23% year to date once it got to the highs on Monday, just over $1,300. The strong rally seen across the entire commodities complex, it's attracted a lot of investors. So back into commodities at one of the highest levels on record since 2009. We've seen investors pouring more than 17 billion into the commodities since the start of the year. So we've seen huge inflows. For those of you who look at the COT reports, the commitment of traders data on a weekly basis, we've seen large inflows into the commodities complex. We also saw last week oil hitting 2016 highs as it continues to rally towards $50 per barrel. So oil hit those new 2016 highs just last week at $48 per barrel for the first time since November 2015. What I found really interesting last week is that hedge funds, they put fresh bearish positions on the US dollar. So with that, we saw the US dollar breaking down to 8-month lows last week, which was quite interesting to see actually the US dollar break below the very key level, which was the 93 level, which we'll take a look at very shortly on the charts. That also helped to fuel the commodity rally that we've seen over the month of April as well. We've seen some big inflows again. Gold and silver, they surged to have their best month since 2013, with gold hitting $1,300 per ounce. Silver rallied up to $18 an ounce just on Monday this week. So we've seen silver gaining up to 25% year to date at its peak, and gold peaked up to 23% year to date. So we've seen some stellar performance. Silver actually went on to outshine gold, which was interesting. We saw hedge funds increasing their bullish net longs to the highest on record, which was incredible. So the managed money positions increased significantly over the month of April. In fact, April had a huge inflow into the silver market. Silver was up 14% over the month of April. Now, if you think about it, over the first quarter, gold was the best performing commodity, up 16% by the end of the quarter. Silver was up 14% over the month of April. And our research shows us that hedge funds increased silver net longs by 21% to a fresh record of 66,000 lots. So we've seen some huge inflows into that market. So essentially, if we have a look at the following chart here, we have seen commodities roaring back. So as an overview over the last 4 months, we can see the bullish sentiment for commodities is at its highest level since 2009 here. Capital inflows from hedge funds, investors into the commodities complex, they are up at record levels, and you can see that across 24 major commodities, jumping by 43% in the last 3 months. So we've definitely seen some significant inflows. Silver leading the way so far, platinum, zinc, then gold. Soybeans and also sugar have been impressive movers over 2016 so far. Of course, light sweet crude oil and Brent crude oil too, but the whole commodities complex has been very lucrative. What we've noticed over the last week is also a shift from equities. So we started to see capital moving out of equities. So the breakdown on the S&P 500, the Dow Jones, I mean, we've seen the biggest correction on those markets since February over the last week. And with that, what we're seeing is a lot of capital is actually moving also into the commodities and grains complex. We saw soybeans, wheat and corn prices up 17% over April. So we saw some huge moves to the upside, growing global populations, concerns over supply, of course, are driving prices higher. They've also been a significant bear market over the last 4 years, and they're starting to come out of that bear market. We've seen some impressive moves so far this year. Trading volumes and open interest is at an all-time record high in those markets, placing the softs back into bull market territory. And with that, we've also seen hedge funds selling equities at record pace to buy softs and grains. They're coming out of those positions, and we've seen softs and grains are trading 60% below their 2011 peak relative to the S&P 500. So it makes these markets prime for explosive move in the coming months. And with that, we've seen hedge funds selling equities at a record pace and moving into softs and grains whilst they are cheap at these current levels. So with all of that said, what we'll do, guys, we'll move over to the charts. Of course, if there are any questions or comments, do let me know. Oil as well, actually, just to give you some stats on oil from the lows of the year up to the 2016 highs that we've seen. We've seen an increase in Brent of 67% off the February lows, and WTI crude oil 70% off its lows of 2016 so far. So we've seen certainly some very impressive moves here over this certainly over this quarter and over the month of April as well. So we'll just move over to the charts, guys. If there's any additional questions, do put those in the chat. As always, your contribution is, of course, valued. I'll move over to the gold market first. What I find interesting about gold right now is just looking at the data from the SPTR Gold Trust, the world's largest gold-backed exchange-traded fund. We saw inflows again rise yesterday by 0.07% to 825 tons, to their highest level in over 2 years. We also saw significant inflows on Monday as well, which of course we saw gold breaking out to 15-month highs, hitting 1,300 US dollars per ounce. So we've seen a good run that actually puts gold up 23% this year to date from those highs. Now, we're of course coming into non-farm payrolls tomorrow. We expect some profit taking ahead of that. In fact, we've already seen some profit taking over the last couple of days. The US dollar has started to, we've seen a bit of a breakout to the upside over the last couple of sessions. The weekly close in the US dollar will be important. This is the US dollar index. It broke below critical support at 93. It then formed a rejection candle over Tuesday, followed through on Wednesday, a little bit of follow through today. I'm very interested in the weekly close here for the US dollar index. So if we were to close back above 93 here, we could start to see a rotation back up to the upper end of its trend channel here, and we could start to see a little bit more weakness in commodities. But if it doesn't close above the 93 level and we start to see a bearish close, particularly if we get a close below 93 here, we could really start to see commodities brewing for another leg up here. And that's what I'm very interested in at this point in time. It's worth noting the move that we've had so far on gold, it's in terms of the overall context of previous moves to the upside, first legs up here after we've been coming out of a bear market. So we've been in a strong bear market with gold over the last 4 years. In fact, if you look at gold over the previous bear markets that we've been in over the last 100 years, actually ranks in one of the second most significant bear markets that gold has been in. And typically what you tend to get is the bigger the bear, the bigger the bull afterwards. So if you, it's the law of action and reaction in the market. So if you see a market which has been a significant decline, very strong bear market, when it finally starts to base out, it can roar back. And that's what we've seen so far with gold this year. 4 months of gains now, and we're continuing. Really, we haven't had a significant pullback or correction. Normally, on a breakout move of this sort of magnitude over the last 4 months, you would expect in the region of about a 50% pullback of the move that we've seen so far. 50% correction would be something which you can expect in a market like this. I'll give you an example. Sugar recently actually corrected 50%, and then it continued to rally, and it's at a point now where it's going to break out of its swing high very shortly. It corrected 50% spot on for the next leg up. Now, gold, by contrast, hasn't really had that sort of significant correction at all. I mean, we've corrected in the region of about the 23% Fibonacci level here, and we corrected again just in the region, not even the 38.2 level. And you can see here, if we take it up to the swing high at the moment, a 50% correction from the swing lows going back to the lows of December up to the recent high would put gold in the region of about 1175 to 1200. We're nowhere near that in terms of correction at the moment, which is unusual. So we're in a little bit of uncharted territory here with gold, and we're also still seeing significant inflows. So for those of you who do monitor the COT reports, the commitment of traders data every single week, the inflows that we're seeing into gold is increasing. We're seeing a lot of strong hands in this market. Inflows into SPDR Gold Trust are increasing. Every pullback is being treated as a buying opportunity. Look at the overall price structure. This year, you haven't really had more than 3 to 4 days of consecutive lower lows and lower highs before gold has been bought back into. So I think that's really important to understand in terms of where we're at in the gold market right now. What do I expect next? What's the next opportunity? Essentially, with gold at the moment, what I'm looking for is tomorrow's non-farm payroll will be important. We'll be watching the US dollar index very carefully. We want to see if the US dollar index is essentially going to stay within this downward trending channel, just form a rejection candle today, roll over and close below 93 by the end of the week. Or if it's going to be able to break back above resistance here, which is sitting at 93.75, and start to follow through. And this is a short-term low for the US dollar index, so we're going to start to see it rotate back towards the upper end of its trend channel. So that will be important tomorrow with the job numbers coming out of non-farm payroll. So we'll be paying a lot of attention to that. If we hold on to these levels, so if gold has just a very shallow pullback here again, the next retest of major overhead resistance, which is sitting at $1,307 an ounce, which is going back to the January 2015 highs. If we take out that level, we're likely to pop. So there will be a lot of buy orders above that level, and we'll also take out a lot of sell shorts about that of that level. We get a lot of short covering, and we've got the potential to have quite a nice pop between the 1325 up to the 1340s. So we are looking out for that potential trading opportunity. Now that gold's had about 2 or 3 days worth of consolidation here, it's pulled back slightly, not much really in the context of the move. It's pulled back about 200 points from the highs earlier on this week, but gold would definitely be looking for a potentially explosive move as we go into non-farm payroll tomorrow. So I would definitely have gold on your radar, and we'll be looking at that in detail for tomorrow's non-farm payroll. Scott, thank you for the question. I will come back to that very shortly as well. Any additional questions, guys, do please put those in the chat, and we'll definitely go through those very shortly. I'll just move it on to also, I want to just show you the grains at the moment, because we are seeing some interesting inflows into a number of these markets. Soybeans, I just want to put that on your radar at the moment. Soybeans has been one of the best performing commodities over the month of April alongside silver. So you can see the gains that we've had here so far, up over 30% to the upside since the lows of the year here, going back to February. So we've seen some huge moves to the upside, some big inflows into soybeans. Again, traders coming out of the S&P 500, coming out of equities, and moving into the grains complex, the other softs here. So soybeans is getting very near again to its swing high from 2016. For me, this is a market that you definitely want to watch. If you've been following soybeans for a number of years, soybeans is actually at its current point in time, it's coming out of a very significant bear market. So over the last 100 years, this actually ranks as the second most extreme bear market on record for soybeans. And as it starts to come out of that bear market, we're really starting to see soybeans get going here. It's had a significant move so far. It's been a roaring start to 2016. And if we can take out this major overhead level of resistance above, we could really start to see soybeans gain momentum above 1,085 here. So I would look out. We're going to be looking out for these key levels in the coming months here, but definitely soybeans, if we can take out its swing high here, we can really start to build up some good momentum. Corn, I would suggest also, if you trade the grains, corn is a great market. It's come down, it's retested previous resistance, which is often turns into support. Big inflows into the grains again, corn especially, actually, corn and soybeans. I would be looking at corn here for another opportunity to go long at this point. It's had only really very shallow pullbacks again so far over the last 2 months. We've seen some significant inflows into corn. Each pullback has only really been over a couple of days before it gets bought back into. At this point, corn does represent a good buy around this zone if it continues to follow through and break above the previous day's high here and have a strong close today. So I'll be looking at corn and wheat as well as we go into non-farm payroll tomorrow. Wheat, similar situation. It's had a decent pullback over the last couple of days. The dollar strength has provided some weakness here as well, but ultimately we're looking for a buy opportunity here as well with wheat. Wheat and corn, they're both quite strongly correlated markets, a bit like gold and silver, so it's better to trade one or the other. But I just want to make sure both of those markets you're aware of, because both of them do offer some potentially good opportunities. I favor corn over wheat at the moment. The price structure is slightly better. It's above a lot of key moving averages, and it's retested a previous resistance turned support at the moment. So I'll definitely keep an eye out for that. Silver, as we mentioned before, we've seen significant inflows into silver over last quarter. We had a pullback over the last couple of days, 2 to 3 days of pullbacks. Again, during this significant rally that we've seen over the last month, we've had very shallow pullbacks so far. We've had just 3 days worth of pullbacks so far this week, Monday, Tuesday, Wednesday. Formed a rejection candle yesterday. We've already started to break above yesterday's high, so we do have the potential to then ramp up and take out the swing high here at $18, which I would be targeting the next major resistance sitting at circa the 18.50 level. So for about from the current price, that would be about $1 move from where we are at the moment, or 100 points. So silver will be watching very closely as we move into tomorrow's non-farm payroll. It could offer a nice breakout opportunity as well if we were to see the US dollar start to rotate lower. You can see, in fact, if we go over to the US dollar, take it back to the daily chart, it is starting to struggle a little bit. You can see it's come up to some key resistance at 93.60. If that finishes with a rejection candle into the close today and it starts rotating lower, comes back below 93, that bodes well for a lot of commodities. Also, in terms of oil at the moment, light sweet crude oil has had a nice little bounce this morning, consolidated yesterday. We had a couple of days worth of pullbacks over. You can see here over Monday and Tuesday we pulled back on light sweet crude oil, but so far it's ramping up quite well. There's some fundamentals which are supportive for that at the moment. We've also seen significant inflows into light sweet crude oil. I will be looking out for this for a trade opportunity this afternoon, and also as we go into Friday and the Baker Hughes report. Again, we had very significant inflows from money managers, investors in oil over the last 2 months here, specifically over April, where we saw new 2016 highs, the highest level oil has been at since November 2015 here. So I'm definitely on alert for another trade opportunity on oil here to add to positions. So definitely just have that on your radar as well. Really, those in terms of the commodities, those are the key markets I really wanted to make sure that you're aware of at the moment. We've got non-farm payroll tomorrow, which is typically very explosive for gold, for silver, of course, for the US dollar index. Has a knock-on effect with other commodities, the grains as well, and it will no doubt have an effect also on oil too. So I do see some good trading opportunities which will be coming out over the next 24 hours here as well. Okay, Scott, so going back to your question here in terms of going long, investing into commodities. Right, I tell you what, Scott, because that's a good question. I think that's something that we need to go probably into a little bit more detail with you in, just in terms of the investment potential. Which one is our preference there in terms of ETF, futures, CFDs, a combination of both depending on the strategy that you're utilizing there, Scott. So we do trade longer term positions as well as swing trade positions which utilize just different instruments. But that's something we can definitely go into more detail with. In fact, I'll go over that very shortly, guys, if you would like more information on that, how you can find out more. In terms of a trading plan for today and as we go into the US session tomorrow, I would definitely keep an eye on gold. I would suggest if you don't have any positions at the moment in the gold market or the other metals or energies right now, it's worth just seeing how the price structure develops over the course of this afternoon, because typically non-farm payroll gives you some explosive moves. You can get some nice setups that develop today on the Thursday, and then you've got the potential for good follow through on Friday as well. Just avoiding any knee-jerk reactions, and then once you've got the real move as we head into the US session this afternoon, you can really see some big inflows, particularly on gold. I'm monitoring this key level of resistance overhead at the 1303 level. Also note that if we do pull back, every pullback has been bought into so far over this year. So if we pull back, I'll be looking at support between 1250 to 1260, because there is a little bit of clean air just to break down. So if we were to see gold just break down here this afternoon or tomorrow ahead of non-farm payroll or on non-farm payroll, I would expect to shift down to the 1250s, but then there's a lot of support at that layer, and I will be looking for a buy opportunity there as well. I would only really look to start getting a bit negative on gold in the short term if it was to break down below this trend channel, take out its swing lows, close below that, close below some key moving averages, then yes, we can start to look for more downside. For those of you who follow seasonality, the typical terminology, of course, for May is sell in May and go away. However, I would note that in the precious metal sector at the moment, they're not following typical seasonality so far this year. We have got a bit of a runaway move here at the moment. We're entering a new cycle in a lot of commodities, the significant inflows that we're seeing, a lot of strong hands in these markets, investors, money managers. So just be aware of that in terms of if you're looking for bearish positions or you're looking to go short at the moment, just be aware there's a lot of strong hands in these markets right now. There's a lot of investors, hedge funds, money managers who are buying big into commodities. So just have that on your radar. Okay. Excellent. Okay, so with that said, I'm just going to go over, guys, the top trades of the week that we've had over the last week, utilizing the Gold and Silver Club signature trading strategies, our research-driven strategies. So first of all, we closed out of our soybean position last week on Thursday, which was a lovely move, 590 points profit, which we caught, and we banked that off the FOMC statement. We had a lovely move on soybeans, really nice swing trade opportunity. Brent crude oil as well hit our profit target on Friday for 410 points of profit, and also gold was a 500 point breakout move that we caught, followed through from the FOMC statement there. That was a lovely trade as well as we came up to the 1300s, banking profits. We've still got gold positions running actually alongside this original position. We've got longer term trades here as well, but we came out of one of our swing trades for 500 points just on Friday, which was perfect. So in terms of the analysis we've gone through today, you can get access to our exclusive live trading ideas ready to implement as well at the Gold and Silver Club. Essentially, whether you're a new trader, if you're looking to develop a solid understanding of the markets, fast track your results, or even if you're an experienced trader but you're looking to take your trading to the next level, you can join the Gold and Silver Club via the private members live trading room. So you can get in touch and you can become a member simply as a member of the private members live trading room. That includes exclusive weekly live trading room webinars. You get live trade setups ready to implement, real-time trade notifications so you don't ever miss a profitable trade. You get the exact details of where we are entering, exiting, placing our stop loss on each trade. You get live trade setups to help you successfully through each trade, customized technical charts and indicators to boost your win rate on every trade as well, and exclusive access to our proprietary trading research to give you really the ultimate edge in the market, plus much more. So very simply, to make an application to the Gold and Silver Club to get exclusive access to our private members live trading room, all you need to do is go across to www.jointhegoldandsilverclub.com. okay, it's www.jointhegoldandsilverclub.com. Once you've completed the application form, we'll of course get in touch with you ASAP. You can also email us, which is our office@thegoldandsilverclub.com, so you can also find out further contact details and further information via our email. If you've got any questions, feel free to call us at our UK, our US office, our Africa office, or our Asia office. Our UK office is 0207 193 0403. Our US office is +1 646 808 0403. Our Africa office is +27 11083 8403, and our Asia office is +8521 8191 0403. You can also, if you would like to be kept updated with our weekly outlooks, you can also follow us via our YouTube channel as well. Of course, make sure you follow the FX Street YouTube channel too, but you can follow the Gold and Silver Club. It's the Gold and Silver Club on YouTube, and you can also follow us via YouTube as well, guys, and get in touch via that channel too. Okay, fantastic. So with that, I wish you all fantastic trading. Have a great week, guys, and of course look forward to working with those of you who will be joining us at the Gold and Silver Club. Okay, thanks everybody, and we'll speak to you real soon. Thanks, guys. Take care. Bye-bye.